Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and we're going to talk about some of the symbols that we're watching as we proceed, not only just into the new week, but the new year. And these are trades, some of which I've been talking about for quite some time, and now they are beginning to bear fruit. And when you take a look at symbols such as NUGT, which is the gold mining leveraged ETF, when you take a look at USLV, which is the leveraged ETF of silver, gold, monthly chart, these symbols we've been talking about for the past couple of years. They are poised for a breakout. They are breaking out, and we expect really grand things from them in 2020. Now, what you may be asking yourself is, okay, how did you do last week? Well, we did outstanding. Here is going back to NUGT. Last week alone, we were up nearly 21.5% on this trade, on this clean breakout. We held throughout this pullback. We've been long the entire year, and we've been selling covered calls, generating income. Now, on Thursday evening, on Thursday night Stock Charts Live, I discussed the oversold condition on a daily basis. In fact, I'm going to play for you a clip right now of what I had to say about gold being overbought on a very short-term basis, as well as NUGT. Here it is. So we closed out the day, again, 1514, spot 40. However, we're kissing the third standard deviation Bollinger Band. Does that mean it can't go higher? Sure, it can go higher, but it's going to correct pretty soon. And we'll probably pull back down and retest the 1500 mark. Now, taking a look at NUGT, of which we are looking to buy more of. So while, yes, I am hedging it right now, we are looking to buy more very soon. Daily chart. Now, you can see the past 3 trading days, we've rallied up. I think it's over 24% on the week. What is it? Yeah, 24.17% on the week so far. I see comments coming in. I'm definitely going to read them in a minute, and I will address them. Hey, Richard, good to see you. All right, so the reason why I'm concerned about NUGT right now, again, as members know, I get very concerned when we have the third standard deviation Bollinger Band being kissed, made love to. In short, folks, if you're not familiar with the third standard deviation Bollinger Band, we're not supposed to be there. That doesn't mean I can't be embarrassed tomorrow morning by seeing a rip higher. I'm not going to be embarrassed. I'm long. However, I'm hedged, and I'll add to that hedge on any strength, expecting a pullback to several support levels that we're watching. The first one is 3250. The next one is 30. The final one, which may ultimately coincide with 30 or 3250, is the rising 20-period moving average, which is at current about $28 and change. That's rising rapidly now, though. So we'll be looking to add more here. We're going to scalp profits on we bought DUST, D-U-S-T. You can see here, it's a very speculative play, but we are kissing the third standard deviation Bollinger Band. I'm not expecting DUST to go rallying up and past $8.54 up to that level. All I'm expecting is a brief counter-trend rally. That'll take some of the froth of an NUGT, allow it to pull back to our support level, watch for a consolidation on a 2 and 4 hour chart. Then the minute that we see a breakout out of that 2 and 4 hour chart, then we cover the DUST position, meaning cover the short position, sell the DUST position, book profits, make them real. Then we go adding more to the NUGT trade. That's the strategy at current. Now, that's what I had to say on Thursday evening, Thursday Night Stock Charts Live. If you want to be involved with that live stream, I do it every Thursday. Click the subscribe button, click the like button, and also click that bell button, and you'll get alerted as to when we go live. And if you want a 15-minute advance notification as to when we go live, there's a link below, a 15-minute alert, opt-in email list. You will not be spammed, and I'll send out an alert to you 15 minutes prior to us going live each Sunday evening. And then on Thursday night, Sunday evenings, we do Sunday Night Futures Live at 6 p.m. Eastern Standard Time. That's when the futures markets open up here in the States. Okay, so on that clip, I said that gold was overbought on a daily basis relative to the third standard deviation Bollinger Band, as was NUGT, and that we bought DUST, which put us short of the NUGT as a hedge. And sure enough, we pulled back on Friday over 2% on NUGT, and we booked our profits on the DUST. I wasn't expecting to see a moonshot higher here. We may go higher this coming week for all I know, but I didn't want to stay too long to the short side of NUGT, of the gold miners, because all I wanted to do was wait for the froth, going back to NUGT, wait for this froth to come off of this overbought condition. Can we still pull back on NUGT? Yes, we can. Am I hoping that we do? Yes, I do. Why? I want to add more to our long position of the NUGT. So one of my favorite trades going into 2020 is the gold trade, is the gold mining trade, as well as the silver trade here. This is USLV on a weekly basis. We're long of it. We've been long of it for some time now. We're up over 10.5% last week alone. We did close off the highs of the week, and I'm expecting a consolidation along the, what was the close? The close was 90.45. So let's call it $90 per share. We want to see consolidation along that level, and then we'll begin to add more to our position. Yes, I do send out alerts to our members. Gold on a monthly basis. I mean, you have to love this chart. Look at this tight consolidation here. We've been in this trading range since August. So far, for the month of December, we're very close to the highs of the month. And we are poised to close out the month with a bullish key reversal candlestick. A very bullish setup, meaning we were lower on the month. We retested support down here, only to reverse to close near the highs of the month. And we are flirting with a breakout here on a monthly basis. Now, I've been talking about gold for a long time, and still, the talking heads on CNBC still will not talk about gold because they want you to buy stocks. We are shorting stocks as of last week, shorting them, betting that we're going to get a pullback into the new year. Let those who are uninformed and not spending their Sunday afternoon learning about the markets buy stocks right now. You should be looking to short them, as are our members. And what else those talking heads don't want you to do is they don't want you to buy gold. They don't want you to buy silver. They don't want you to buy the gold miners, as I've been pounding the table on, because they weren't talking about it back here, meaning the price of gold monthly basis, when we broke out of this long-term multi-year consolidation. They're still not talking about it. Gold is broken out to multi-year highs. We're at all-time highs versus the euro, versus the Aussie dollar, versus the Canadian dollar. The only major currency that gold, or currencies, that gold is not at new highs versus is the Swiss franc and the US dollar. That is going to change in all probability in 2020. So I'm very bullish moving into the new year on gold, silver, the miners. What am I bearish on? I think that this is probably one of the most ominous charts that I have seen in a long time of a major player economically. The ripple effects that a breakdown in Boeing will have on this economy will be vast. The supply chains that they will impact, huge. The chart here on a monthly basis of Boeing is really scary. And I'll start with RSI, putting in lower highs, lower lows. Stokes breaking down, putting in lower highs, lower lows. We're rolling over below 50, a very bearish setup for Boeing. We have a head and shoulders setup on price, left shoulder, head, right shoulder. One could argue that we have broken the neckline. Let's just say that we're at the neckline. Let's be conservative. I think that we are going to break here on Boeing in 2020. So members, more to come if we decide to short Boeing. Other names that we like, Brazil, monthly chart. We've been talking about Brazil. Nobody else is talking about Brazil. Brazil is breaking out. This is the BRZU. It's breaking out on a monthly basis. We love it. Why? It's a commodity play. What's doing well? Oil. The explorers. Who has a lot of oil? Canada, Brazil, right? They are breaking out. They have no exposure or little exposure to China. I'm trying to avoid China. I think there's a lot of problems there, and I want to avoid China this year. So Brazil looking very good. And this is a little play that I like to trade, and it is Cal-Maine Foods. Cal-Maine Foods broke out of a, you can call it a descending wedge formation, bull flag formation, more of a descending wedge, I guess. They're very similar. We broke out here on a monthly basis back in October of 2017, and we've been consolidating ever since. Back in April of 2018, we broke out of a wedge formation. Again, consolidating, backing, and filling. With commodity inflation rising, food inflation rising, energy inflation rising, I think that Cal-Maine Foods is going to do very well. They're in the egg business. They're going to do very well. I think that we're going to break out in 2020. Their earnings report last was not great. I'll lay that out for you. But I think that commodity pressures will force the price of eggs higher. This is a very thinly traded stock, and I think that there is a lot of upside potential here. It is a very, very high volatility stock, so just be careful. No market orders, limit orders only. Why? It's because it's thinly traded. All right, you don't want to get a horrible execution. And with that, folks, I'm going to sign off again. Click that like button. Subscribe to our 15-minute alert opt-in email list down below, and you'll get notified of when we go live. Click that bell button. If you could give me a like on YouTube, I'd appreciate it. And everybody have a great, great new year, and I'll certainly be in contact with you throughout the new year. Everyone stay healthy and enjoy the remainder of your weekend. Be well.